Nvidia released its latest 13F filing highlighting major changes to its investment portfolio. The company reduced its position in ARM Holdings and fully exited SoundHound AI, Serve Robotics, and NanoX Imaging. The news had those stocks tumbling 3.5%, 28%, 40%, and 11% respectively. But should anyone really be surprised? It's been wild how much weight investors have put on Nvidia trades. They treat it as though these positions validate their own investment thesis. Now we see the reality. Many market participants were just playing follow the leader. When Nvidia buys, the market seems to follow. SoundHound surged in Q1 2024 after news broke out that Nvidia started building a position. The funny thing is that the investment was made in 2017 during an early funding round, and they only had to disclose the position up until now due to the size of their portfolio. But the market had a similar reaction to NanoX Imaging and Serve Robotics as well. But in the grand scheme, these were tiny bets for the $3.43 trillion giant managing a $400 million investment portfolio. Nvidia had invested $30 million into Serve Robotics, $8 million into SoundHound AI, and $362,000 into NanoX Imaging. None of them would move the needle for a company of Nvidia's scale, yet investors treated these moves as if they were game-changing bets. Yes, Nvidia has dominated in designing and manufacturing AI semiconductors, and sure, they likely have insight into which companies could benefit from their technology. But let's be clear, Nvidia is not an investment firm. They haven't proven that they can pick winners like Warren Buffett, Bill Ackman, or Peter Lynch. Their small stakes show little conviction, and the fundamentals of these companies suggest they are more like venture-style gambles than long-term investments. In other words, just because Nvidia buys doesn't mean it is a buy. To show you what I mean, here is a quick snapshot of each of the company's trailing 12-month financials. Now let's take a look at each of their market valuations. ARM Holdings, SoundHound AI, Serve Robotics, and NanoX Imaging have price to sales of 46, 50, 353, and 37 respectively. Simply put, these multiples are insane. Of the four companies, ARM is the only one that is profitable, and all of them have outrageous valuations. Strip away the hype around Nvidia's stake and it's clear that these are not rational investments based on fundamentals. For Nvidia, it's different. These positions are immaterial to a $3 trillion giant generating over $56 billion in organic cash flow. Plus, they benefit from a positive market reaction every time one of their investments is disclosed. But for retail and institutional investors, they don't have the same advantages, and following these trades blindly is a dangerous game.